Okay, so here we are on part 3 of this video, and we're going to finish with a day-to-day cursory kind of glance, just to see that we can understand all the behaviors in the context of how market is reacting to these value areas. Now, we last were observing the consolidation here in a pretty strong bounce over a period of 5, 6, 7 days, and then very commonly you'll see that consolidation, and then the participants observe the behavior of the market after there's been a move. Remember that influence is always there of a tendency for markets to revert to the mean once they get extended, once there's been an exuberance for some period of time. Sometimes it can be just 3, 4, 5 days. Sometimes it can go for months, strong trends, weak trends. But in the middle of those longer term trends, you always see pauses or retracements or consolidation or pullbacks. All these things are typical of what markets do, because there are always infinite variables influencing all of the factors that make people buy, sell, or events which cause stock markets to react from any fundamental level, but also technical levels. So there are just so many things that all combine for whatever reasons, whatever level of analysis, from traders' perspective, we can find patterns we can trade off of. And typically you have an up move for several days, higher highs. At some point the market takes a breather, and we can recognize the pattern and evaluate if the market's going to pull back at a high like this. And the value areas will give us the indication. As we saw, you're above the value area here all day, the upper half. The next day a quick probe rejected as they stayed above the value into the close. The next day at the upper value they were rejected, and gave indication they might break lower, but they couldn't do it, and it closed in that value area. So the next day it gaps up, and you're above all day. So that's but maybe this wasn't sufficient, and this is another pattern that comes. You have exhaustions at the end of these moves that have been one directional for some period of time, and then you have a value area as a result of this price action the next day, and you see market gapping significantly lower, and not only significantly lower than where that price was dominant and volume was dominant the day before. They even rejected the value area the day before. Once you see this happen, that's an indication of a strong trender again. So that's what they did, and then they came down and they held at the first value area up off the low there. So you can go back in time and say, where's this big strong sell-off going to end? And you draw in your level at that point of control, at that value area low, and that's exactly where the lows were. Excellent place to take profits if you manage to get in somewhere in the first 5-10 minutes of the breakdown, or on some pullback on a tick chart or whatever. And you can see here that this isn't a place to be expecting it to break lower, and it finished there and created a very narrow value area. This is going into the 4th of July. Let's not waste too much time on that. But after the holiday, they came back, gapped much lower, and were below value all day. And the reversion to the mean would be expected here, and they did establish some value during that day, mostly in this consolidation. And that's where they meandered through the next day. So sometimes you have days like that too, where it gets so indecisive that there are times when value is just so predominant nobody's willing to make an attempt to initiate up or down. But then there's also many times in these cases you'll have a late day move out of that value, as you see here. So the next day, value is going to be similar to where all the trading occurred the day before, and you had another excellent indication in a short amount of time that within a half hour of the open, they had two highs exactly at the value area low. This is a selling opportunity anywhere in this range, and it broke strongly and got very overextended to the downside now after 1, 2, 3, 4, 5, 6 days down, and now they're giving indication of that rotational behavior. Value area of where the bulk of trading was that day, and they traded in the upper half and above throughout the day. Came back down though, failed to get out of it because they came back in it close to the point of control. So the next day, point of control, maybe it's a good buy, but when they got up into the value area, no ability to break the point of control. So here you're looking at a selling opportunity at resistance again. So plenty of opportunities there, as it took an hour and 15 minutes and could not penetrate that point of control. And when they went down, typical target right at the value area low, but now you're seeing there's been a lot of value established in here. So that's a strong indicator of, when you see 3 days, that's a lot. It can be 2 days, 3 days, 4 days is really strong. So here they are, the fourth day at this level where value has been pretty clearly demonstrated, and this point of control is a strong level. You might doubt it is doubtful maybe that they would get this low. So now you have 3 higher lows by a few ticks each time. That's a low, that's a low. This low here, again, target back into the value area. Expect at the very least the opposite value area. Big time trading opportunity there, and when it blew through it, you're definitely going to be buying pullbacks on a shorter time frame for the rest of the day, and this was a big one. So very clear just from looking at the value areas, these kinds of setups. Now the next day, value being established much higher, because what that means, there was a tremendous amount of volume here, more than the whole rest of the day, at this level here, from here to here. So a lot of people bought on the close. Big money managers not afraid to buy at the high of the day because they go in on the close. So if the bulk of the volume was right at the end of the day, so many points off the low, that's who it is, the bigger money, and that's why the point of control held. So the entire day in the upper portion, entire morning, and this breakout could be very, you could have great confidence on that breakout, and then big gap up after that, and that's bringing us up to where we are now. The last few days, once again, upper value area, whole morning, whole first half of the day, breakout at the end. Above value all day long, holding for 3 bottoms, so that when they gapped up the next day, they couldn't even make it back to value. And again, a lot more consolidating, rotating going on the last couple days, and then brings us right up to today. Big gap up, classical exhaustion setup, excellent sell on the much higher open, because you'd be wondering, why would the big money managers be buying up here when all of this proof, you could say very strong bullish evidence is given for several days. They had a lot of opportunities. They don't really want to buy the highs all the time, you know. So the only people buying here are shorts getting squeezed, or people who have no knowledge of the markets and tend to always panic out or buy stupidly in at extremes, and that's what markets do. So way above the value area, and that was their target once they failed on the open, to close that gap and to get down into value, which they did. Broke the value area low, but regained it, and the bullishness returned by the end of the day. So that's where we are today, and we'll continue with a new topic in our next set of videos. Thank you.